300,000s. Does that inform what you're expecting to get on Friday?
Well, so first, kudos to ADP for revamping their methodology, and I think this revision of methodology will put their number closer to how within the Fed they think about the ADP figures. But basically, they do a bunch of filtering and cleaning of the ADP figure and get a pretty decent prediction of payroll report. But anyway. We, however, here at Bloomberg do not really take onto signals of the ADP number just because in the past, despite a couple revisions, it has not been able to predict the payroll number.
Okay, so how does that make you think about the broader question, Anna, of what happens Friday in the way that, I know you cover economics, you're chief UX economist for Bloomberg Economics, and you're not necessarily looking at the market, but we are seeing in the equity market sort of a step back and I think waiting for this big economic data point that we get on Friday. What should our expectations be? What are Bloomberg Economics expectations?
So the consensus of economists expect 300K in non-farm payroll gains. We are expecting 250K. It's not that much of a difference. I think as long as payroll is above, 150K, it's a 75 basis point in September. And, it doesn't take a lot for non-farm payroll gains to, of increase for unemployment to drop or stabilize at 3.5%. All it takes is about, on average, 120K gains per month in the rest of the year, then you will see unemployment rate stabilize at 3.4%. So even if ADP's number flag, a slower pace of job growth, that number is good enough for a 75 basis point hike, I think.
Okay, we've got about a minute left. Kriti, let's step into hypothetical land. Let's assume that the jobs report disappoints on that headline figure. What do stocks do?
You're asking a really
hard question.
In the hot seat.
Yeah, I know. Okay, look, I think if you see a little bit of a pullback in the payrolls number, if you see a payrolls miss, I think stocks will rally simply because there is this massive buildup that is essentially pulling out of cash. So I feel like that's what's being priced in here.
I mean, I don't know what you think, Katie. My thought would be, well, maybe that means that the Fed doesn't have to be as aggressive with rate hikes. So it could be bad news is good news scenario.
This is so fun. I'll hold you both to this.
You know she will too.
Anna, do you have a prediction?
Well, I think the payroll number will disappoint, but unemployment rate will fall. And that means the Fed will have to hike 75 bips still.
But then does it reward the market? Does the market reward the Fed for that thinking? Maybe
no. The market wouldn't rally in that case if unemployment rate falls.
All right. Well, we have less than 48 hours to see what happens. Yeah, we do. Hey, big thank you, Kriti Gupta, markets correspondent for Bloomberg, joining us from the Bloomberg Interactive Brokers Studio in New York. Also, Anna Wong, chief U.S. economist for Bloomberg Economics. She joins us from our 99.1 studio in Washington, D.C. Once again, we are seeing the S&P 500 down 0.3% right now. The NASDAQ down just over 0.1%. Let's stay in Washington, D.C. For world and national news. We go to Nancy Lyons. Hey, Nancy.
Thanks, Tim. In a new court filing by the Justice Department, we're learning more about the search of former President Trump's home and how investors believe there were attempts to hide highly classified documents that officials were trying to recover. Loyola Law professor Jessica Levinson says the search warrant was sought only after repeated requests for the documents to be returned.
The Department of Justice did not believe them. Ultimately, the Department of Justice was correct not to believe that because when they got the search warrant and the FBI went into Mar-a-Lago, they found even more classified documents, some with the most highly sensitive markings on them.
Loyola Law professor Jessica Levinson, the judge overseeing Trump's request for a special master to review the documents, will hear arguments tomorrow. The Food and Drug Administration has authorized an update to COVID-19 vaccines, clearing the way for new booster shots. We get details on that from Bloomberg's Amy Morris in Washington.
Until now, COVID-19 vaccines have targeted the original coronavirus strain. This move by the FDA tweaks the recipe of shots made by Pfizer and Moderna with the hope that these modified boosters will help blunt a winter surge. The so-called bivalent shots contain half the original recipe and half targeting today's most common Omicron strains. The updated boosters are only for people who have already had their primary vaccinations using those original vaccines. Shots could begin within days. In Washington, I'm Amy Morris, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thank you so much for that update, Nancy Lyons, Tim Stenevec, and Katie Greifeld in this afternoon for Carol Masser. Katie, we just heard Nancy Lyons talk about the latest when it came to the Trump documents search. We have a new story out on the Bloomberg terminal, among the most read this afternoon by our own Bill Ferries and Jennifer Jacobs, that says that Trump documents bear the hallmarks of close-held U.S. secrets.
The Department of Justice filing to a federal court late Tuesday. It includes a photograph of the documents. It makes the accusation that someone at Trump's Florida estate may have tried to remove papers before an FBI visit to the property in June. That's following a grand jury subpoena. That
signaled possible obstruction and helped the FBI secure a warrant to carry out the unprecedented search of Mar-a-Lago that happened earlier this month. That was August 8th. A photo of the government included, the photo that the government included, I should say, in the 36-page filing shows papers over a floral carpet. Have you seen this online?
I am looking at a photo of it right now.
I saw it before I even saw it in this story. I saw it just make the rounds online because a lot of people have been tweeting it out. It bears the bold red marks of top secret alongside a gold frame of a Time magazine cover from 2019, though it's unclear who actually arranged them that way.
One of the visible documents is dated Wednesday, May 9th, 2018. That is the day after Trump announced the U.S. withdrawal from the Iran nuclear deal. And these indicate that some of the material found at Trump's Florida home is likely, quote, special access program material that's used for specific types of classified information, subject to more stringent security measures, according to people who reviewed the Justice Department photo.
Yeah, the department's affidavit for the search did not mention that level of classification. I'm looking at the photo right now just to describe it. You can see it on a floral pattern carpet, and there are all these documents strewn out. You can't read all the documents or even make out what's on the documents because the government officials have actually blurred them out and put big white blocks over it, so essentially redacted what was on those documents. Check out this story and more on the Bloomberg terminal and at Bloomberg.com. You're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Less than 2 hours to go until we wrap up the trading month of August. We are looking at a down day for the Dow, the S&P, and NASDAQ. Investors have been sorting through sometimes conflicting economic data. Job openings data yesterday underscored tightness in the labor market, but revamped ADP data out this morning showed U.S. companies increased headcount at a relatively sluggish pace in August. All of this ahead of Friday's jobs report. Here's where we stand. S&P 500 index down now, down 13 points, a drop of 0.3%. Dow Industrials down 141, a decline there of 0.4%. NASDAQ moving lower as well. The NASDAQ Composite Index right now trading lower by 19 points. That's a Bloomberg Business Flash.
Bloomberg's comprehensive cross-platform coverage, bringing you insight on what to watch ahead of the U.S. market close, starts right now.
We welcome you to the kickoff to the close. Caroline Hine, Taylor Riggs, Shonali Basak, joined now by our colleague Katie Greifeld. We walk our Bloomberg audiences, whether you're watching TV, whether you're listening to radio, or indeed digesting it on YouTube. We're going to point you towards what we are caring about as we head towards these closing bells. And it feels as though really what we care about is the magnitude of the sell-off on the month, Katie.
Yeah, and just dialing down on what we've seen for the past 2 days, it just feels like a market that cannot hold on to a bid. Both days we've started green, quickly turned to red.
Yeah, and not as large extent of the sell-off that we see on the day, but still to the fact that we're off by 0.3%, having been higher by more than excess of 1% earlier in the trading day, just shows the desire to push this market lower at the moment. We're off by 0.4% if you're looking at the Dow Jones Industrial Average. We're seeing volumes ever so slightly elevated there, but really across the board, we're seeing a big slump in volumes and a downward draft, 0.2% lower on the NASDAQ. Actually, for once, your relative outperformer, we're off by 0.4% on your small caps. That is 7 points lower, Taylor.
Love that you take us through sort of the big equity market movers here, Caroline. I love this because about this time every day we get to sort of kick you off what I'm really looking forward to as we count down to that closing bell. For me, I'm always going to start at the top, really take a look at some of that key economic data. Now, of course, we know that we got the ADP number. There's a little bit of a change in methodology, but how much does this really highlight the strength of the labor market as we think about the Fed's next moves? This is the current Fed funds rate in pink. This is what the market in white is pricing in for the end of the year. This is showing that the market's thinking the Fed can do so. Maybe the labor market data that we got this morning, and again with Friday's payrolls report, will confirm that this is indeed a market in which the Fed really can move.
Exactly, and I know we're watching how inflation is being beat in the United States, but I know we're going to also be taking an eye on what inflation looks like in Europe because we are watching a rate hiking cycle on both sides of the Atlantic.
I think that was really important that actually, for once, the euro is outperforming the US dollar today because we were all eyes on the ECB. Why? The reaction function to this number that came out earlier today, in excess of 9%, 9.1% in Eurozone inflation data. And of course, this is yet record after record as we see energy prices having been such a push on the overall price pressure that we see in that continent over the course of August. Now, it's interesting, though, that today, again, we see a pullback in natural gas prices, in particular in Europe, Taylor. This as we start to see, well, Europe really focusing on building its supply side ahead of the all-important winter. But is that enough when you've got a 20% drop in natural gas? It's still very elevated year on year.
That's exactly where I was going to go, is unfortunately you're seeing sort of the drop in nat gas prices, but we still have yet to see that show up in some of that inflationary data. Caroline, of course, you would know sort of the stickiness of that relationship more than anyone on this program, but hasn't even really begun, Katie, to move the needle when you think about what 9% inflation still means in Europe.
And what it means for companies, really, as we think, again, cross-Atlantic, bring it back to the U.S., going micro. We know that a lot of corporate executives have come out and sounded pretty stressed. I want to switch gears a little bit here and talk about Bed Bath & Beyond, because Bed Bath & Beyond is definitely not immune to some of those pressures. They revealed a turnaround plan today. It was pretty drastic. It involved shutting 150 stores, cutting 20% of its workforce. Companies hoping that's going to reduce costs by $250 million. But guys, look at the share reaction. I mean, it's down 21%. That's actually trimming a little bit of some of the deeper losses it was experiencing earlier today. So not exactly a vote of confidence by shareholders.
August has been the most extraordinary month for Bed Bath & Beyond. We know it's a meme stock, but at one point it was up, like scaling new heights, leveling of almost $25 a share. It's now pulled right back down, as we're just seeing with Katie now, at about $9. And really, that's a 60% drop off those highs. Basically, you're flat on the month. You could have gone to sleep at the beginning of August and missed out on the entire meme frenzy when it came to Bed Bath & Beyond.
Wish I had.
Well, what's interesting, too, is that the meme stock frenzy is not really shaking Morgan Stanley's bear-in-chief. The chief U.S. equity strategist at the bank, Mike Wilson, has said there's more pain to come in the stock market. Take a listen to what he had to say.
The earnings risk is now upon us, right? We're cutting numbers, and we think the numbers are going to come down even further over the next 2 quarters. So the bottom line for us is the PE multiple is wrong again, not because the Fed is going to be hawkish, but because the equity market is being too optimistic about the earnings outlook.
When you look at the table of strategists, Mike Wilson isn't even the most bearish, but if you take a look at his comments today, even in a soft landing scenario at 3,400, you're starting to get to the bottom end of the range of Wall Street estimates. He said 3,000 is what you're looking at in a deeper recession.
You know what is so interesting, though, is we showed this chart earlier about the earnings growth, and every week that went by this last earnings season, earnings growth year over year actually improved. And I don't know if it was just we were really bearish coming in. Caroline, you were talking a lot about sort of the cuts coming into that cycle, but as the earnings season progressed, it actually felt like things actually weren't that bad, supporting some of the fundamentals.
And again, we just see such a bifurcated market because you have Morgan Stanley worried about the impact of higher interest rates. You have Bank of America worried about the impact of higher interest rate and what that means for the corporates individually. The fact that their earnings growth is probably going to have to slow down. But on the flip side, JP Morgan saying really the slowdown we're about to see, particularly look at the jobs numbers, that's going to dial back the Fed longer term. So really, that's what makes the market.
Can I just say, I want to sit Michael Wilson, I want to sit Marko Kolanovic down in a room, and I just want to listen to him talk. I think that would be
Don't know
really
how well
great
that would go.
television. Maybe we can arrange that. Let's look into it.
Let's look into it. A little bit of animosity being fired across the bows when you actually read into the notes. But of course, that does it for now. We'll be back together again with more Countdown to the Close just about 30 minutes from now, live on TV and radio and YouTube.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld in this afternoon for Carol Master. Katie, another great solo simulcast. Thanks for holding down the fort there in the Interactive Brokers studio while I recover from COVID here in Brooklyn. Really appreciate it. I would like to be a fly on the wall in that meeting that you have with Marco.
Yeah, definitely. We gotta make it happen. Let's work on that. That's my new project.
Let's work on it. You're listening to Bloomberg Business Week, and this is Bloomberg Radio. We got much more of the program coming up in just a few minutes.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenovec and Katie Greifeld in for Carol Massar this afternoon, live from New York City. Forget soft landing. That's not the term we need to be thinking about right now. We're going to tell you a new term. Well, not so new. It comes from the 1970s, but one that was new to me and one that could be new to this economy in just a few minutes. First up, though, Charlie Pellet, we got less than 90 minutes to go.
Indeed, and 90 minutes to wrap up the trading month of August with the Dow, the S&P, and NASDAQ very much in the red. This, of course, ahead of Friday's jobs report. Right now, though, the S&P is down 18, a decline of 0.5%. The Dow down 181, drop there of 0.6%. NASDAQ down 31, down 0.3. The NASDAQ 100 index also down 0.3%, and the Russell 2000 lower now by 0.5%. Stocks declining on the final trading day of a month that has seen everything from equities to treasuries and commodities retreat as central banks around the globe step up their fights against inflation. As for that market backdrop, Emily Hill is a founding partner at Bowersock Capital Partners. She was interviewed this morning on Bloomberg Surveillance.
We're cautious about equity markets. I would agree that we need to be opportunistic, and if we see a retracement to the June low, then that's a good time to put some money to work.
And today seeing declines again with the S&P now at 39.66, down 0.5%. The 2-year yield now 3.44%. The 10-year yield 3.12%. Spot gold down $12 the ounce to $17.12, down 0.7%. West Texas Intermediate crude is declining today, down 2.4%. Back below $90 a barrel, 89.46 right now on WTI. Oil on track for its third monthly drop, the longest losing run in more than 2 years, hampered by the likelihood of slower global growth. Energy stocks, oil stocks specifically, trading lower right now. ExxonMobil down 0.4%. BP, its ADRs down 1.4%. Chevron down 1.2%. EOG Resources up 0.5%. Pioneer Natural Resources down 0.1%. Recapping stocks lower, S&P down 0.5. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Okay, if there's one term to describe the summer, or maybe the spring, perhaps it's soft landing. The idea that the Fed can pull the feet of taming inflation without ruining the economy. But Bloomberg News economics reporter Rich Miller writes that we've got to forget about a soft landing. Instead, we need to be thinking about something called a growth recession. Rich Miller is economics reporter for Bloomberg News. He joins us this afternoon on the phone from Washington, D.C. Okay, a growth recession, Rich. We've got to go all the way back to 1972 to look at the origins of this term. What is it?
Well, it's kind of a hybrid, right? It's a protracted period of time when growth slows to basically nothing. Unemployment goes up, but we don't actually slip into a recession. As a sort of term, it's an oxymoron, but as a term implies, it's a lot more painful than the kind of soft landing, which sounds like you're almost going to bed and going to sleep and having a nice dreams. This is something that's more painful.
Okay, so soft landing, I agree with you. It sounds like you're gently resting your head upon a pillow. But this growth recession, you write that it's a protracted period of meager growth and rising unemployment. Mm-hmm. What about inflation, and how does this differ from stagflation, for example?
Well, the idea of this is that by growing slowly, you gradually sort of wring inflation out of the system. So whereas in a recession, you kind of almost break the, you pull the Band-Aid off, right? But this is like more like a sort of slow motion. We had an economist, probably somebody you guys have had on, Diane Swank.
Yeah.
Sort of say, this is, like dripping water torture.
Not quite a pillow landing.
Yes, not quite a pillow landing. It's, more like a nightmare landing. But but it's not like, you're getting dunked all the way and drowned, which I guess is trying to. This is maybe a tortuous analogy, but which is more like an outright recession. But it's something painful, and I think we heard pretty clearly from Jay Powell that he's more and more coming around to the idea we're going to have to go through some pain for this inflation problem that we got to be cured.
We are, but I guess one area that I'm still struggling with, Rich, is when we kind of threw out the window the term soft landing. When did we decide that that's no longer possible? And what was it that made that determination? Well,
I don't know about we, but I think
the collective we.
The royal we, right?
Exactly.
I think it was clear from Powell's speech. I mean, he has been talking about a soft landing. He didn't mention soft landing at all in his speech. He didn't mention growth recession, but the words he used effectively were sort of what a growth recession is. He said we're going to have pain, we've got to have growth growing slowly below what the Fed considers its potential, which is about 1.5% to 2%, and we got to have it going for a while. So he effectively sort of abandoned the soft landing description and adopted the description of a growth recession.
And so what does this idea of a growth recession, does that set us up at all for Friday's payrolls print, for example? Does it sort of inform how we should be thinking about it, what sort of number to expect?
Well, not necessarily what sort of number to expect, but it sort of, it's indicative of the Fed's thinking. So that, last year, of course, the Fed was dismissing inflation is transitory. But now I think it's worried that inflation is going to be more protracted. And its big worry is the labor market, and that wages are growing too fast to be compatible with its 2% inflation target. And that's why it wants to get unemployment up. And that's why, a soft landing is no longer something that it's shooting for. It's something that it needs to get unemployment up. So I don't know whether we're going to see that on Friday. The median of Bloomberg economists is, I think the unemployment rates, because last I looked, the unemployment rate's going to stay steady at 3.5%, and we're going to create about 300,000 jobs. Still a pretty strong labor market. Still but still too strong for the Fed's liking.
All right, Rich Miller, we're going to have to leave it there. Thanks so much for taking the time and joining us this afternoon on Bloomberg Business Week. Rich Miller is economics reporter for Bloomberg News. He joins us from Washington, D.C. on the phone. Check out his story. Powell abandons soft landing goal as he seeks growth recession. Well, let's stay in Washington, D.C. now and get a check on the latest world and national news. For that, we turn to Nancy Lyons. Hey, Nance.
Thanks, Tim. The Department of Justice argues in a new court filing that appointing a special master to review documents seized at Donald Trump's home would be a threat to national security. Bloomberg Government's Jack Fitzpatrick says the filing also raises the possibility of obstruction by the Trump team.
The FBI actually visited Mar-a-Lago in June ahead of that August 8th search warrant, and they were told by Trump's lawyers after that June meeting that they had handed over all the relevant documents. That clearly was not true.
Bloomberg Government's Jack Fitzpatrick. The judge overseeing the special master request will hear arguments tomorrow. The FDA has cleared a new version of Pfizer's vaccine for adults and kids over 12 and Moderna's modified shot for adults who are 18 or older. Both are vaccines that target the original strain of the virus as well as the newer substrains. UN inspectors are making their way to Ukraine's Zaporizhzhia nuclear power plant to see if it poses any danger to the surrounding area. The plant was temporarily knocked offline due to damage to a transmission line. Ahead of the visit, the head of the International Atomic Energy Agency, Rafael Grossi, spoke of the dangers in going.
These operations are very complex operations. We are going to a war zone. We are going to occupy territory, and this requires the explicit guarantees from not only from the Russian Federation, also from the Republic of Ukraine, and we have been able to secure that.
Grassi has rejected suggestions the inspection team will only stay at the plant for 1 day. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thank you so much for that update, Nancy Lyons. Tim Stenevik and Katie Greifeld in for Carol Nasser this afternoon. Katie, among the most read on the Bloomberg terminal, a story that, just because we're in sort of the dog days of summer, although I don't think anyone paying attention to what's happening in markets right now would say that we're in the dog days of summer, but there has been, a precipitous decline in M&A, but it hasn't completely dried up.
We're talking about Glow Recipe. It's a skincare brand popular for its fruit-based products.
Do you know it?
No, I was going to ask you,
either.
is this part of your regimen?
I think the term is routine.
No, you can use regimen.
Regimen, okay. No, I don't actually know it.
Okay.
But maybe I'm not watching enough Shark Tank.
Listen, let me tell you about it. So it's a skincare brand. It's popular for, again, it's fruit-based products. It's exploring a sale that could value it at $400 million to $500 million. This is according to people with knowledge of the matter. The company is working with Goldman Sachs, said these people. They asked not to be identified because the matter isn't public. It has $80 million in annual revenue. So someone's buying it, not us.
Yeah, that's a really good point. We should say that no final decision has been made, and Glow Recipe could opt to remain independent, according to the people. A representative for Goldman Sachs declined to comment, while representatives for Glow Recipe didn't immediately respond to requests for comment. A private equity firm focused on investments in consumer and lifestyle products and services, its North Castle partners, announced an investment of an undisclosed size in Glow Recipe last year. That's according to a statement. I did say that it had its start on Shark Tank.
Yeah.
Maybe I'm not watching enough Shark Tank.
I love Shark Tank. So this appeared back in, it was co-founded in 2014, appeared on Shark Tank. It is a Korean beauty-inspired brand. It's best known for its watermelon moisturizer, Yum. It started selling in retailer Sephora in 2017, Tim.
So not all M&A has dried up, Katie, even though, we're in summer and,
there's a pipeline.
There is, but it's not anything like we saw in late 2020 and 2021, right?
No, those days.
All right, we'll see if this deal actually happens. Check out the story available at the Bloomberg terminal and more at Bloomberg.com. You're listening to Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, and NASDAQ all declining after fluctuating between modest gains and losses for most of the session, but right now solidly in the red. We have got the S&P down 25, a drop there of 0.6%. Dow Industrials down 226, a decline of 0.7%. NASDAQ right now down 55, a drop there of 0.5%. 2-year yield 3.43%. We've got the 10-year yielding 3.11%. Spot gold down $11 the ounce, now at $17.12, drop there of 0.7%. The retreat for West Texas Intermediate crude continuing, was trading below $89 a barrel briefly moments ago. Right now $89.05 on WTI. It is down by 2.8%. Bed Bath & Beyond shares plunging by 21.4%. It has unveiled a turnaround plan that envisions new financing, sweeping store closings, and the sale of as many as 12 million shares of stock. Again, Bed Bath & Beyond down 21.4%. Recapping stocks lower with the S&P now down by 24 points, down 0.6%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, if you're not one of the estimated 11 million people who listen to the Joe Rogan Experience podcast each week or each episode, and maybe you missed the Facebook founder and CEO Mark Zuckerberg, his 3-hour interview with Joe Rogan last week, don't worry, we have got you covered. Our columnist Max Chafkin at Bloomberg Business Week writes all about it. Max joins us this afternoon on the phone from Queens. His column, Not Even Joe Rogan Can Save Mark Zuckerberg's Metaverse Pitch, is featured in the upcoming issue of Business Week magazine. You can read it now, though, on the Bloomberg terminal and at Bloomberg.com/businessweek. Also with us this afternoon is Joel Weber, the editor of Bloomberg Business Week. He's with us in the Bloomberg Interactive Brokers studio. Joel, I want to start with you and just talk about numbers here in the platform, Joe Rogan. It's pretty incredible that an estimated 11 million people listen to that each week. I mean, just to put that in context, just over 2 million people watch primetime programming on Fox News, which is the most watched cable news network. We're talking huge numbers here.
Huge. And if you're Mark Zuckerberg, you probably are trying to reach a very specific audience here, which is mostly white, mostly male, mostly middle-aged. And so we, Max listened to what Mark had to say about the metaverse here. And that was, I think, really interesting because, look, like, you got one of the most valuable companies in the world. You rebrand it. You go from Facebook to Meta. We still have only a vague sense of what this land of no legs looks like and what you can do there. But Mark is obviously really keen to go all in on that. But what he described in this podcast is what, the moment that Max listened to it, he sort of was like, wait, I gotta write about this. So Max, what piqued your interest?
Well, a couple of things. One is just the extent to which this sales pitch, and really, that's what it is. It's Mark Zuckerberg talking for the first hour of the show, all about how great, AR and VR are going to be, just how similar it was to the pitch that Mark Zuckerberg has basically been making for the last 7 or 8 years, and sort of thinking about, well, why hasn't it evolved more? The other thing is, well, what has evolved and what kind of really drew me in is Mark Zuckerberg's sort of personal branding, right? He has in the past kind of framed himself as this, coding savant, this geeky guy, right? Very, soft-spoken or whatever. With Rogan, he went in a completely different direction. He kind of tried to brand himself as a, mixed martial arts enthusiast, a gym rat. It was just like a completely different version of Mark Zuckerberg than I had ever seen. Yeah, he's the alpha, exactly. And you can see why that might make sense, right, if you're Mark Zuckerberg, because, Joe Rogan, right, he's got a huge, as Joel says, a huge audience of men. He's very, concerned about masculinity. He does action sports. Zuckerberg apparently has taken up Joe Rogan's favorite sport, jiu-jitsu, has hired one of Joe Rogan's friends to be his coach. I would love to know, like, how long ago that was, and if it was, how long before he tried to get on Joe Rogan's podcast that happened. But in any
You're
case,
such a cynic, Max.
It does make sense, because here's the thing. They're trying to sell this technology that, while pretty impressive, I mean, it can do things that are I'd say, undeniably cool, hasn't really found an audience outside of kind of like the video game world. And I think, of course, that's a world that cares about Joe Rogan. I think he's of course trying to build a little momentum for this technology. It's just not going that well. And I think when you take a few steps back, it's really hard to see this as any kind of success.
This is such an interesting case study in psychology. I want to dig more into the alpha male thing, because I learned in this piece that alpha males don't watch television.
That was the implication. Zuckerberg went on this rant about his own personal sort of media consumption habits, during which he said he doesn't watch TV unless it's a UFC bout, because TV is too passive.
Yeah.
And he used the term beta to
What does that mean? Tell us what that means.
Well, in the kind of like Joe Rogan manosphere world, right? Alpha is a strong, aggressive, manly. Beta would be like passive and effeminate or something like that. So it's almost as if he's trying to, add some like gender dimension to television. And even leaving that aside, as weird as that is, I'm not sure that, going after television is like a great way to sell this niche technology to the mainstream. I mean, mainstream people really like TV. They watch, as Zuckerberg knows, many hours of it, and trying to seem relatable by, talking about how, TV is too passive is just strikes me as a very odd sales pitch, one that is unlikely to be effective.
Back to the metaverse, the land of no legs. Max, the thing that really captivated me about that you pointed out in the story was that this all basically hinges on VR. And obviously, Zuckerberg went big there back in 2015 when Oculus Rift became part of Facebook. And really, what he's trying to do in the metaverse all comes down to that acquisition and the future of what it can accomplish. But you're dubious still, right? Like, why?
Well, look, I think that clearly, and Facebook has shown us, right, that there is a market for, face-mounted computers, for strapping, the equivalent of a smartphone very close to your eyes and using it for entertainment. We can argue about whether that's, alpha or whatever, someplace else. But what I'll say is that when you consider the enormous scale that Facebook operates, right, it has almost 3 billion people going to its properties every single day. When you consider the amount of money that has gone behind this thing, and we're talking about, this very famous, figure, $10 billion in 2021, but like, that's just the beginning, right? Because for 6 years before then, Facebook spent money, billions of dollars creating these devices. And then this year, actually, its losses on these VR things have accelerated, right? It's losing more money today than it was a year ago. And when you look at what they have to show for it, it's incredibly modest. They, put out a Super Bowl ad for this product, Horizons World, which is their sort of like VR game / meeting app. It's very similar to like Second Life. And, they made an announcement after the Super Bowl ad. They had 300,000 users each month. At 300,000 users a month is 0.01% of what the company's properties get in a day. It's the kind of thing that, normally wouldn't be on their radar at all. And again, it's something you've spent billions and billions of dollars.
Right. Well, it's a great column, Max, and we appreciate you doing the heavy lifting of listening to the 3-hour interview of Mark Zuckerberg on the Joe Rogan Experience podcast. Check out Max's story. It's available on the Bloomberg terminal and, of course, at Bloomberg.com/businessweek. Max Chaffin is a columnist for Bloomberg Business Week. You can follow him on Twitter, too, at Chaffkin. Joel Weber, the editor of Bloomberg Business Week, also joining us live from the Bloomberg Interactive Brokers Studio in New York. You're listening to Bloomberg Radio.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts.
Taylor Reid, Shonali Basak, joined now, of course, by Katie Greifeld, filling in for both Carol Masser and Tim Stenovic. Together, we welcome fully across our audiences on TV, radio, and YouTube. A moment to analyze a market that wants to go lower, a 0.6% drop, and actually every single asset class, bar the dollar, has had an ugly August, Katie.
And it's interesting to think about just today's action. It's actually a pretty muted day in the bond market, not seeing any sort of haven bid there. Even to your point, Caroline, we do see these losses deepen.
Yeah, I mean, the bond market hasn't been a haven throughout the month either. And in fact, TLT having a pretty ugly session. Let's have a look at what's happened over the course of the day, because we are looking at a monthly decline of more than 4% on the S&P. You're looking at a 0.6% dive on the day, 23 points lower at 3,962. We're also lower by some 0.6% on the Dow Jones Industrial Average, and it's off almost 4% on the month. And the Nasdaq, which is down the most on the month by 4.5%, is actually having a relatively okay day, but still off by 0.5%. And the Russell 2000 off by 0.8%. Your outperformer on the month, though, it hasn't slid, well, only 1.7%. So we'll take it if we can, Taylor.
Certainly not an outperformer today. That's sort of the individual sectors within an S&P 500. Similar to the story yesterday, today looks mostly broad-based red when you think about the individual sectors, the securities within those sectors as well. There's one sector, communications, of course, here in the green, but even that's only about 0.4%. And again, I steal this from Gina. There's only 30 securities within that are positive on the day. So it's really maybe sort of the big techie of the tech that's higher. Otherwise, everything else, Shonali, is pretty red when you think about materials, discretionary industrials, and of course financials, as we've talked a lot about some of the muted yield moves as of today.
Yeah, borrow, short, lend long. That's how it works. So Meta is what's rising the most today in the S&P, to your point on big tech, and that is because it's supposed to gain, as we know, from some of the shrinkage, if you will, of Snap. But PVH Corp, that's down the most in the S&P, more than 9%, almost 10%, as department store exposure and executive departures sting the company. CrowdStrike is also falling pretty significantly today at almost 5%, with outlook seen as conservative, according to analysts after earnings were released.
And on the high side, yeah, men are getting a little bit of a bid on the back of Snap. But I'll tell you what's not high, Shonali, is oil. And actually, it's not been higher for 3 straight months now. In fact, I wanted to bring this sort of cross-asset perspective because there has been no place to hide. In fact, energy stocks, utilities have done relatively well on the year and indeed on the month. But energy stocks outperforming even as we see energy itself and oil prices continue to slump. It's the longest losing streak that we've seen in a couple of years now for oil, Katie.
It is an interesting discrepancy between what the stocks are doing and what the actual underlying market is doing. We'll see if that can continue. But it's important to talk about commodities. Again, we know it is such an important input into inflation expectations. That's what the Fed cares about. And the steady march of Fed speak continues. We heard from Loretta Mester. Of course, she is Federal Reserve Bank of Cleveland president earlier today. Take a listen.
My current view is that it will be necessary to move the Fed funds rate up to somewhat above 4% by early next year and hold it there. I do not anticipate the Fed cutting the Fed funds rate target next year.
Again, that was Cleveland Fed President Loretta Mester speaking earlier today in Dayton, Ohio. And I hope everyone wrote that down because she was very clear. Terminal rate above 4, we're going to keep it there. Don't expect rate cuts next year.
And Caroline, I wonder how you think about this on a global story as well, because I think we were all sort of at our desks when we got the headlines of, as we think about 75 in September for a Federal Reserve, 75 in October for an ECB, and what a pivot that has been. Now, of course, in the face of some pretty stunning inflationary numbers that they too have to tackle.
Yeah, 9.1%, another record when it comes to Europe. And of course, we've been bracing ourselves for that. We know that the supply chain headaches have hit nowhere more so than Europe, particularly as Ukraine, Russia continues to evolve. We've seen energy prices, interestingly, on the day and the last couple of days, dip down significantly in terms of gas prices, but still so elevated. This is a country that, well, this is a group of countries that continue to have faced consumer impact on that. Many saying, look, a recession is inevitable, but still the ECB has to go hawkish no matter what.
You know, it's interesting to the point about this chorus of even Fed presidents just doing the do what it takes chant.
Stealing the line out of Mario Draghi, really.
Yeah, do what it takes. Well, the thing that's interesting about the Loretta Mester comment is that no rate cut part of the comment, I think, because if we hear more of those also, you wonder what the S&P doesn't look like this year, but looks like into the end of next year and even the year after. I had a large investor once tell me that he's not worried about the S&P at 3,500 this year. He's worried about the S&P at 3,500 years from now. So, to what extent does this drag keep on for?
I got to say, my head kind of spins if I try to think about the end of 2023. It's hard to even think ahead of the jobs report on Friday.
I can't bear talking about the end of summer, Katie, let alone the end of 2022, let alone the end of 2023.
Summer doesn't end until like September.
Y'all not
20.
planning your retirement?
Let's not rush it. But in any case, just bringing it down to sort of that closer sort of deadline that I can wrap my head around, the jobs report, I'm really struggling to figure out what would actually be good news at this point. If you're talking about, the actual economy or if you're talking about the market, it seems to be two different things at this point.
And the ATP figures, really trying to square that. We know that they've been on hiatus. We're trying to understand the new methodology here. But the fact that the ADP did show significant increase in pay that's still going on from a wage inflation perspective. And also there is still some lack of strength being shown there, where small businesses perhaps laying people off, the mid 250 to 500 as well. It is interesting, though, that comparing that to JOLTS, which just seem to show such tightness, such strength, there's so many contradictory points in the market at the moment in terms of the data.
I really do wonder what the focus will be. Ellen Zentner, she always does, comes out with a preview, the economist over there at Morgan Stanley, for what we're looking at on Friday. And again, looking at 350 in August when we think about just the massive strength. And Shelley, actually, maybe what the Federal Reserve wants to see is massive strength so that they can continue on that hiking cycle.
I do recommend that Odd Lots with Neil Kashkari finally dropped today. I did listen to the full hour. It's very good.
When?
And you do want to listen to whether many other Fed officials will follow his
Does he
course.
say growth recession too?
I did not hear that term, but I do think the growth recession thing and what Diane Swank had to say about the torture, the type of torture that it causes.
A slow drip.
Very specific.
Yeah, very specific, very painful, very different than the soft landing that we had been talking about a few months ago. But in any case, guys, we got to leave it there. We're going to be back in less than an hour. That does it for now. We're back again live on TV, radio, and YouTube at 4 p.m. for our Beyond the Bell coverage when we take you through today's market close.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's a Bloomberg Business Week. Tim Stenovic and Katie Greifeld in for Carol Masser this afternoon live from New York City. Katie, again, thank you for doing the simulcast solo for me this afternoon.
I gotta say, when Caroline welcomes us and says, time now for the simulcast with Katie Greifeld, it lacks a certain gravitas. I hope you come back soon.
I will be back soon. But you know what? Tomorrow, special programming note, Carol Masser and I will be broadcasting live from the U.S. Open on Thursday and Friday of this week. We've got some great guests lined up. And hopefully we'll be seeing some tennis and talking quite a bit of tennis as well. So we're looking forward to that. So no simulcast on Thursday and Friday. But the band is back together next week, Katie.
Yeah, I'm a little salty about the U.S. Open thing. The point was raised. It is a little bit suspicious that you're magically better when you get to go watch the tennis. I'm suffering through, not suffering, enjoying these simulcasts solo, but I'm happy for you. I'm looking forward to you and Carol's coverage.
I'll forward you everything from HR that tells me that I'm allowed back in the building after 11 days.
You did bring receipts.
Yeah, I have the receipts to prove it. But the timing, let's just say it worked, at least for this. Hey, speaking of what's not working today, is look at that equity market.
That
down
was
0.4%. Thank you.
Yeah.
The S&P 500, that is. The Dow Jones down close to 0.6% at this point. And the NASDAQ down more than close to 0.3%. All eyes, of course, on the jobs report that is coming on Friday morning, 8:30 Wall Street time. We will, of course, have live coverage of that on Bloomberg TV and Bloomberg Radio. 300,000 is the expectation. And, of course, all watchers of that report will be looking closely for signs that inflation is easing, that the jobs market is actually becoming less tight, though we did get that JOLTS number yesterday that shows that there are quite a few jobs available for people who are looking out there for everyone who's looking for a job. You're listening to Bloomberg Business Week. Let's get to Washington, D.C. now for an update on world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. Russian President Vladimir Putin is remembering Mikhail Gorbachev as a statesman who had an enormous impact on the course of world history. Western leaders say he's the man who helped dismantle the Iron Curtain. Angela Stent is director of the Center for Eurasian, Russian, and East European Studies at Georgetown University. She reflects on how he's being remembered in Russia.
For many Russians, they see him as the man who allowed the Soviet Union to collapse, and the Soviet Union then, the post-Soviet Russia was no longer a great power. They remember the 1990s as a time of impoverishment, and they believe that he was partly responsible for that.
Georgetown University's Dr. Angela Stent. Gorbachev died last night at the age of 91. The FDA is authorizing new bivalent COVID boosters that will do more than the original shots. FDA Commissioner Dr. Robert Califf explains.
The updated boosters contain the same basic ingredients as the original COVID-19 mRNA vaccines, but are modified to target the circulating Omicron variant, BA4 and BA5, as well as the strain that was included in the original vaccines.
Dr. Califf says the new Moderna booster is for those over 18, the new Pfizer booster for 12 and up. Advisors to the CDC will be holding a meeting tomorrow and Friday to discuss them. A new federal report says U.S. life expectancy took a sharp decline during the pandemic. Researchers with the National Center for Health Statistics say the average life expectancy of Americans plunged in 2020 and 2021 from 79 years to 76. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons, Tim Stenovic, and Katie Greifeld, live from New York City this afternoon. Katie in for Carol Masser, who will be returning tomorrow for our special coverage live from the U.S. Open. Katie, in the meantime, we got to talk ETFs here because I'm pretty sure that apart from cats, it's your favorite thing to talk about.
I appreciate you throwing me a bone here, and it is one of my favorite things to talk about.
One of your top three, right?
One of my top three. Let's talk about this ETF in particular. We're talking about the ProShares Short S&P 500 ETF, ticker SH. It actually pulled in the most cash in terms of inflows since 2020. As you probably remember, Tim, that was a very rocky time. Traders added a net $154 million in the latest session. Again, the largest one-day increase since April 2020.
Okay, we're talking about an ETF that bets against the S&P 500 here. So what the fund seeks to do is daily results that correspond to the inverse of the performance of the U.S. equity benchmark. It's gained about 15% in 22 as the gauge has tumbled, as you noted, Katie. So what is this telling us about the way that investors think the S&P 500 is going to move? Well, lower.
That would make sense. That would
At least
logically
these investors,
make sense.
right?
Yeah, and if you combine that with some of the other flows that we're seeing in the ETF landscape, it's actually interesting. If you look at some of the cash-like ETFs, I'm thinking about ticker BIL. That is a State Street fund that tracks 3-month Treasury bills. People are putting money back in cash. So again, money going into funds that short the S&P 500, putting money into cash-like funds, taking money out of corporate credit ETFs. It all just speaks to this sort of risk-on vibe that's been rippling through markets ever since Mr. Jerome Powell took the stage on Friday.
We can't ignore the bond market here. Listen to what Michael Landsberg, the Chief Investment Officer of Landsberg Bennett Private Wealth Management, said in an emailed comments, quote, "We do not believe the bottom is in for stocks, especially as the bond market with inverted yield curves on the 210s and 230s is reflecting tough economic times ahead." Check out this story. It's available on the Bloomberg terminal and at Bloomberg.com as well. You're listening to Bloomberg Business Week on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. NASDAQ just turning higher, back in the green. The S&P now little changed. We've got the Dow on the minus side. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks mixed in a quiet tape with the Dow currently down 114 points. S&P's drop 8. Well, the NASDAQ, like you mentioned, still higher, now up by 4. The U.S. 10-year yield at 3.13%. Gold is down 11. Oil is in the red. And Bitcoin is trading little changed. Among the main 11 S&P sectors, only telecom and real estate were in the green. And leaders to the upside in the Dow, Amgen and McDonald's, while Salesforce and Merck led to the downside. After earnings, CrowdStrike fell 5%. And in other news, ARM says it sued Qualcomm for licensing and trademark violations. And Bed Bath & Beyond fell 20% after planning a stock sale and job cuts. Wrapping things up, C3 AI reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg. Type Squawk, SQUAWK, on your terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, I'm looking at shares right now of Bed Bath & Beyond, ticker BBBY, down 19.3%, just cratering this afternoon after the company unveiled a turnaround plan that envisions new financing, sweeping store closings, and the sale of as many as 12 million shares of stock. This, as our own Jeanette Newman writes, delivers another jolt to the investors who had piled into the retailer even as its troubles mounted. Jeanette Newman joins us now. She's U.S. luxury, retail, and personal care industries reporter for Bloomberg News. She joins us on the phone from New York City. Okay, Jeanette, we're seeing the way that shareholders are reacting to this news. Give us the details of this turnaround plan.
Hi, thanks for having me on. So as you mentioned, it's the sale of as many as 12 million shares. And I guess on the slightly positive side, the company secured about $500 million in new financing. That was something that had been in question for the past several weeks. Obviously, that is more debt that the company will have to pay down. So they've also laid out a plan about how they're going to try to make their business more efficient, and that includes in part what you mentioned, closing about 150 stores. That's out of about 1,000 in the U.S. and Canada, as well as laying off about 20% of their corporate and supply chain staff, and then to make the business more efficient and sell more and really just bolster sales, which have been falling about a quarter in the previous quarter and are expected to fall about another quarter in the current quarter, in the current 3 months. The company has said that it's going to shift its strategy and discontinue some of the private label brands, the brands that it produces itself, that it had really pivoted to in the past couple of years over under the former CEO.
And so, Jeanette, it's so interesting to compare and contrast some of the corporate news that we got today, because Snap, actually, the parent company of Snapchat, also announced today that it's laying off 20% of its workforce. It's appointing a COO. I'm not going to ask you about Snap, but if you look at that stock, it's up 9% today. And then Bed Bath & Beyond comes out and unveils this really big sweeping plan, and shares are absolutely plunging. I mean, why is this happening in the stock market? What are shareholders saying through the share price?
We should say that we're asking Jeanette also to explain a meme stock here. So,
of
right,
course,
full disclosure.
of course, but
right. I think part of what people are doubting is just the ability to execute on this strategy, right? I mean, the company is trying to execute a strategy during which would be difficult at any point in time, and it's even more difficult now because of the current consumer environment, right? Bed Bath & Beyond obviously sells bed, bath, and home products. That's 50% of what it sells. Those are exactly the type of products that we're not seeing as much demand for now. So it's just trying to execute this turnaround strategy in a questionable consumer market, and the company hasn't been successful in executing past turnaround strategies. So I think investors are just doubtful of whether it's going to be able to make good on what it's laid out today.
Shares down about 64% and change from its highs back in September, and it did have that, really sharp spike up to $23 a share just a few weeks ago with all the Ryan Cohen news. We're not going to get into that right now, Jeanette. What are analysts saying right now about sort of the fair value here? I mean, I was joking when Katie was asking that question that we're going to have you explain a meme stock, but is it no longer a meme stock at this point because of the decline that we've seen recently? Is it kind of, at least according to analysts, being traded more based on fundamentals here?
I think given the craziness with meme stocks, I don't even think analysts themselves would bet to call what's going to become a meme stock again or not. But I mean, I think in terms of the fundamentals, I mean, look, the company, as I kind of mentioned, the sales are falling, and the company this morning also said that sales for the current quarter are down 25%. Right? I mean, we're seeing other companies that are also reporting kind of falling sales in this current soft environment, but that's really something that's something very difficult.
Well, Jeanette, to that point, what are analysts saying, not about the meme nature of this stock, but about the plans that the company unveiled today specifically?
I think one of the things that we were looking to see is what Bed Bath & Beyond would do with its Bye Bye Baby brand. So that obviously, as the name indicates, sells baby products.
I spent a lot of money there.
Okay. On your child, right?
Yes, on my child.
Okay.
I bought baby stuff for him.
That makes sense.
You might have been one of the people that was slightly cushioning the sales there because Bye Bye Baby actually has done better than the namesake brand Bed Bath & Beyond, and so it's kind of let's call it the tarnished jewel in the tarnished crown of Bed Bath & Beyond. And so the company said, there was some speculation that maybe the company was going to sell Bye Bye Baby. And they said, no, we're going to hang on to that. We think that we can, use this and leverage this. And some analysts have said, that is a good thing. It's a good thing to hold on to that. That is a bright spot within this business. And perhaps, it's good to have it on hand if they were to sell it in the future when it looks like if they could get the business back to a stronger point.
There's
well,
not
never
enough
a dull
cat
moment.
stuff.
What's that?
Bye Bye Baby. That's what I've noticed.
They probably do, right? You said they do, right, Katie?
No, there's not enough cat stuff.
Oh, okay. Well, maybe you got to go to a pet store for that, okay?
That makes sense.
Big thank you to Jeanette Newman, U.S. Luxury Retail and Personal Care Industries reporter for Bloomberg News, joining us this afternoon on the phone from New York City. You can follow her on Twitter at Jen Newman. You're listening to a Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It is Bloomberg Business Week. Tim Stenivek and Katie Greifeld in for Carol Masser this afternoon. Katie, you mentioned Snap while we were talking about Bed Bath & Beyond. Bed Bath & Beyond shares down about 20%. Snap shares up more than 9% after news yesterday that it will cut 20% of its workforce and add a COO. We're going to get the details from Alex Branca in just a few minutes. First, though, Charlie Pellet, we are less than a half hour away from the close.
Indeed. Not only that, Tim, but less than half an hour until we wrap up the trading month of August. Red on the screen right now. Last update told you that NASDAQ was higher. That was true at the time, but right now we've got NASDAQ on the minus side now, down 18 points, a drop there of 0.1%. S&P as we head toward the closing bell, now down 17 points, lower by 0.5%. Dow Industrials lower now by 183 points, a drop there of about 0.6%. We do have the 10-year yield now, 3.14%, the 2-year, 3.45%. Spot gold down $13 the ounce to $17.10, a decline there of 0.8%. West Texas Intermediate crude down 2.6%, $89.18 a barrel on WTI. Fed Chair Jay Powell has abandoned a soft landing goal as he seeks a growth recession, a projected period of meager growth and rising unemployment, but it stops short of an outright contraction of the economy. Anna Wong is chief U.S. economist at Bloomberg. She was interviewed this morning right here on Bloomberg Radio.
So I think the baseline from the point of view of FOMC is that job losses have to rise by about at least 1.5 to 2 million by 2024 in order to rein in inflation. I think that's the baseline now.
COVID-19 boosters from Moderna and the partnership of Pfizer and BioNTech that are tailored to the latest Omicron variants have received U.S. regulatory clearance. A move toward additional protection as concern grows about potential new waves in the fall and winter. Pfizer shares, they're down 1.2%. BioNTech down 1.3%. AstraZeneca lower by 1.5%. Moderna's down now by 2.4%. Johnson & Johnson down by 0.4%. Again, recapping, stocks lower, S&P down 19, down 0.5%. Spot gold down 0.8%, 17.10 the ounce. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, shares of Snap right now rallying more than 9% after the company said it will cut 20% of its workforce / investments and add a COO. Let's get the details right now from Alex Branca, Bloomberg News technology reporter here, and she joins us from Los Angeles. Alex, it's great to have you with us.
Connection lost.
Some really important context here. Even though Snap shares are up more than 9%, the company is having its worst year since it listed publicly. It's down close to 80% as of yesterday's close. Give us the details on this restructuring.
That's right. The stock is down 80% since then, and about 75 percentage points of those are from this year alone.
Wow.
So a lot of news here, and I'll kind of round up the details for you in this kind of maybe Band-Aid pulling exercise in a bad year for Snap. They have announced that they're letting go, they're firing 20% of their workforce, they're killing or scaling back a number of their kind of buzzy projects. They had their chief business officer who heads up the all-important money-making ad business leave for Netflix, and now they're reorganizing her advertising sales department under a new executive. So I guess you can call this a major restructuring for them, kind of a re-looking and refocusing of their business, which if you're an investor, you're seeing this as potentially good news in kind of a months-long, trickle of quite bad news. But if you are, say, an employee at Snap working on something like the Pixie, which is this little picture-taking drone they had in development since 2017.
Yeah, got a lot of attention.
Earlier this year. Yeah, got a lot of attention. That department is no more. So good news, bad news, depending on which side of the coin you're on this Snap issue.
And I'm kind of obsessed with this just sort of black and white, sort of binary opposite set of reactions in Snap and what we got from Bed Bath & Beyond today. And we were just talking about Bed Bath & Beyond's turnaround plan announced today with a retail reporter at Bloomberg News who made the point that the reaction in the stock could be basically investors having a lack of confidence in management to execute its turnaround plan. And the fact that we are seeing Snap shares rise to the extent that they are, I mean, is that a vote of confidence in CEO Evan Spiegel?
I think it's an indication that the street thinks that they're focusing on the right thing. So just to set a little context of what's happening in social media right now, they make their money off of advertisers. It's been a year of, I guess you can call it economic uncertainty. We've seen marketing budgets get smaller, and that means that fight for those advertiser dollars have gone up. And Snap has lost out on a lot of that. They've seen revenue decline. They're on track. They announced today to see revenue be in the single-digit growth level for the first time ever since they were a public company. So they are really kind of fighting for ad dollars, and it's clear that they are not winning against the likes of Facebook, Instagram, and Google. So what they're focusing on and basically kind of focusing the team on is figuring out how to make the advertising business work. Evan Spiegel, the CEO, has said over the past few months that if a project doesn't fall in the buckets of new advertising, improving metrics on ads, or other kind of monetization on existing projects, then it's going to fall below the line. So I think your point there is well taken, that investors are, seeing this at least as the right move. Now, I'll say, and I have to flag this report from JMP Securities on the Snap News, they basically came out and said, the analysts over there, however, it's unclear to us who leads the advertising organization today. So take that for what you will in terms of where people have confidence on what's next for the ad business. But, this does seem to be, bad news internally is good news for the street.
Okay, what about Netflix and the role here these folks have who left the company for Netflix? I mean, is this a big win for Netflix?
It is a big win for Netflix. Jeremy Gorman is a pretty well-respected executive who basically has been helping build out Snap's advertising business over there. You'll recall that Netflix has been looking at potentially expanding their ad offerings for a lower cost, adding ads to a lower cost offering. So Jeremy Gorman and actually one of her lieutenants are leaving the business to head over to the streaming giant. So again, loss for Snap, but a bit of a win grabbing two kind of seasoned execs. Gorman is someone who investors hear from on the quarterly earnings calls at Snap. So she certainly knows how to operate not only internally at a company, but also on the things that the street really cares about.
Alex Barinka, always great to check in with you, technology reporter for Bloomberg News, joining us this afternoon from our Los Angeles bureau. Check out Alex's story and more on the Bloomberg terminal and at Bloomberg.com. You can also give her a follow on Twitter at Alex Barinka, Barinka. You're listening to Bloomberg Business Week. Let's go from LA to Washington, D.C. now for an update on world and national news. For that, we turn to Nancy Lyons. Hey, Nance.
Thanks, Tim. The FDA is authorizing the first update to COVID-19 vaccines. The new booster doses target the original strain and the newest Omicron subvariant. FDA Commissioner Robert Califf.
These updated boosters are known as bivalent vaccines because they contain two messenger RNA components of SARS-CoV-2 virus.
Califf says the Moderna vaccine will be for those 18 and up, the Pfizer's for those 12 and older. The hope is that the modified boosters will blunt yet another winter surge. An advisory panel of the CDC will look at these new vaccines over the next 2 days. The Justice Department says White House records held in a storage room at Donald Trump's Florida home may have been moved before an FBI search in June. And Bloomberg government's Jack Fitzpatrick says the Justice Department believes there could have been an attempt to obstruct the investigation.
The things they're describing here, if the allegations are true, that would be illegal to withhold that information in the midst of an FBI investigation.
Bloomberg government's Jack Fitzpatrick. Included in the court filing by the Justice Department was also a photo showing some of the classified documents as evidence. The filing was made in response to a lawsuit brought by Trump seeking to have an independent third party appointed to review materials that were seized by the government. Today marks the 25th anniversary of the death of Princess Diana. Today, her fans have placed tributes outside the gates of Kensington Palace and at the scene of the Paris car crash that claimed her life. Global news 24 hours a day, on air and on Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons, Tim Stenivek, and Katie Greifeld, in for Carol Masser this afternoon, live from New York City. Katie, speaking of New York City, just to the west of New York City is a state that you call home, New Jersey.
I call home New Jersey, the Garden State.
Also the home state of none other than Bruce Springsteen.
Yeah, usually it goes birth state of Bruce Springsteen and then Katie Greifeld. Yeah, he's a bit like royalty in New Jersey, you could say. But reports of $5,000 tickets for his upcoming tour have led a New Jersey congressman to demand Live Nation Entertainment to explain its, quote, exorbitant markups and secretive pricing practices that, quote, rip off consumers. Drama.
We're talking about Democratic Representative Bill Pascrell, who wrote, quote, I write on behalf of my constituents and fans across the country that are excited for Bruce Springsteen and the E Street Band's 2023 tour. Hardworking Americans who are fans of Bruce and other popular entertainers should have the ability to enjoy live entertainment without ticket sales practices that rip off consumers.
And it's interesting. It feels like he's being a bit careful not to slam on Springsteen. That probably would not be popular, of course, around his northern New Jersey district, where the boss is considered a home state hero and a champion for the working class. But the congressperson has said that he has heard some fans, again, are paying $5,000 in tickets, that's expensive. I don't think I would do that.
Yeah, look, we got to say that Springsteen's manager, John Landau,
stage, perhaps.
It's a lot of money.
Yeah.
He said that prices averaged in the mid $200 range and were comparable to what other artists of his stature charged. I got to tell you, Katie, a few weeks ago, I was at a concert. Jack Antonoff, who is also from New Jersey, he did a song with Bruce Springsteen over the last couple of years. Midway through the concert, Springsteen came out on stage and performed the song with Jack Antonoff.
How much did you pay?
I think the tickets were like $68 or something.
It's not bad.
Not bad to see the boss as a surprise. Check out this story and more on the Bloomberg Terminal and at Bloomberg.com. You're listening to Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go until we wrap up the trading month of August. We have got stocks trading mixed right now. NASDAQ on the plus side. However, the S&P and the Dow, they are both lower. Stocks are dropping on the final trading day of a month that has seen everything from equities to treasuries and commodities retreat as central banks around the globe step up their fights against inflation. Here's where we stand minutes to go ahead of the close. The S&P lower, little change now, down 0.2%, down 7 points. NASDAQ back in the green, up now by 24 points, up 0.2%. The Dow remains lower by 92, down by 0.3%. 10 years down 17 seconds. 10-year yield 3.16%. The 2-year yield 3.46%. Spot gold down $14 the ounce right now, $17.10, lower by 0.8%. And West Texas Intermediate crude trading very close to $89 a barrel, $89.24 right now on WTI. Crude lower today by 2.6%. So again, recapping, mixed picture ahead of the close here with the S&P down 6, a drop there of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. Even as relations between the U.S. and China remain frosty, the two countries appear to have struck a compromise that would allow mainland companies to continue listing on American exchanges. The dispute centered on a requirement that foreign companies listing in the U.S. give American regulators access to their raw audit work papers. After years of talks, China appears to have finally agreed to U.S. demands. While caution is warranted, a successful compromise would benefit the U.S. as much as China. And if this deal holds, both countries should take steps to build on it by lowering tariffs, for instance, or resuming talks on climate. With so many forces driving the U.S. and China toward conflict, neither side should miss an opportunity to push back. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Well, here we are already, less than 10 minutes to go, to the close of trading on this final day of August. And it's not looking great for the month. The S&P 500 set to close down close to 3.9% for the month. The NASDAQ composite down more than 4% for the month. Let's get into it with Amy Bush, Chief Investment Officer at Tandem Wealth. Amy joins us this afternoon from Phoenix, Arizona. Amy, how are you?
I'm well, Tim. Thanks for having me. It's good to be here.
Yeah, it's really great to have you with us. Help us make sense of what's going on here. I know that you've pointed out in notes to our producers that it has been an unusual year, to say the least. We've got U.S. stocks lower. We've also got U.S. bonds lower, not necessarily supposed to go down at the same time.
That's right. It's been a tough year for investors with both the S&P 500 and the Bloomberg U.S. bond index producing negative returns. And we know why that's happening. It's because the Fed is increasing interest rates to crush inflation. So that puts pressure on bond returns, and that puts pressure on corporate earnings, which of course hurts stock returns. So last week, Tim, we heard the Fed say that they are intent on crushing inflation. And that is not good news going forward for bond investors. So we're always looking for ways to diversify our portfolios. And in particular, we're looking for ways to mitigate interest rate risk. And at Tandem Wealth, we're doing that in our asset allocation with investment-grade convertibles.
let's dig into that because I saw that in your notes, and my heart rate quickened just a little bit because I come from the world of fixed income. Pitch me on investment grade convertibles right now.
Sure, Katie. So there is one attribute of investment grade convertibles that I think all investors can use to their advantage in their asset allocation. And that is the fact that investment grade convertibles have a very low correlation with the Bloomberg Aggregate Bond Index. And so if my fellow terminal users are playing along at home, they can punch up function CORR and look at the correlations between all your favorite asset classes. But that's a great screen for asset allocators. And what that low correlation means, Katie, is that over time, and we've looked at 10 different rising interest rate periods over the past 20 years, and we see that investment grade and convertibles have outperformed both straight bonds and high yield bonds over that time. So they just make a nice complement to investment grade portfolio, bond portfolio, a way for us to mitigate interest rate risk because we know that the Fed has told us that they're going to keep on increasing interest rates.
What about traditional, non-convertible, just regular old corporate credit investment grade? What is your view on that asset class right now? Because we have seen spreads widen a bit coming out of Jackson Hole, still below the peaks of summer, though, and curious whether you see that as a buying opportunity or whether there's more to come.
Well, we expect spreads to get a little bit wider here. We know the Fed's going to continue to raise rates. We see the economic data continuing to deteriorate, and we're looking at those leading economic indicators, housing, credit spreads, the shape of the curve, confidence indices, and of course, the most important leading indicator is what the Fed says they're going to do. They're going to increase interest rates. So we still think that there's some credit risk on the table as the economy deteriorates.
How much a deterioration do you think we'll see with the economy? We're no longer talking about a soft landing right now. We're talking about a growth recession.
That's right. We expect spreads to widen. Again, we're keeping an eye, Tim and Katie, on housing. That's our most leading indicator. It takes us into a possible recession, and it would lead us out. So keep an eye on housing. All the housing statistics have continued to deteriorate. We saw that yesterday again. And so, again, keep your eye on those leading indicators. That'll give you a good sense of credit spreads and where they're heading. We saw them, pop up and then come back down, and then after Jackson Hole, rise again. So, again, the economic data is going to continue to deteriorate as we get into the latter half of the year.
And Amy, since we're speaking the same language here, I want to talk about quantitative tightening because it's set to kick into its highest gear in September. And I don't know, I feel like it's under discussed. We talk about the level of interest rates all the time, how much the Fed is going to hike them by, but quantitative tightening, as we start to see maybe that runoff accelerate, how do you expect that to play out in markets?
Yeah, Katie, we have never before seen this kind of runoff, so we're not exactly sure how it's going to play out. And you're right, it has been under discussed. All we've been talking about is interest rates, but the balance sheet, the number, I think it's expected to go up to about 90 next month in September. So it's going to increase. We have to keep our eye on that. We just don't know what the effect is going to be because we've never had this amount of magnitude before. So it's a little bit of an experiment that we're enduring here. And so I think the best thing for investors to do is to, again, fully balanced and diversified. Look at different instruments that can help you improve your risk return profile. And again, convertibles are just one way they can do that.
Amy, before we let you go, let's talk equities just in the last 30 seconds that we have with you. The S&P 500, has it hit its lows for the year?
We don't know that yet, Tim, but we do expect earnings to continue to deteriorate again. So again, it's trading, kind of at its average multiple, but if you expect earnings to fall, and we do because the cost of capital is going up for most corporations out there, earnings are under pressure. That means stocks are under pressure, and we expect that to continue going forward.
Well, certainly under pressure today. The S&P 500 down close to 0.6%, bringing its month-to-date loss currently at 4%. Amy Bush, really great to chat with you, Chief Investment Officer at Tandem Wealth, joining us this afternoon on the phone from Phoenix, Arizona. Well, we are just a couple minutes away from the close of trading on this final trading day of August, the final day of August. Taking another look at the markets, the Dow Jones Industrial Average down 0.7%, down 3.9% for the month. The S&P 500 down 0.6%, down 4% for the month. And the NASDAQ down 0.4%, down 4.5% for the month. Don't go anywhere because coming up next, we're joined by our Bloomberg teams from TV and for our cross-platform coverage on TV, radio, and YouTube. It's Beyond the Bell. You're listening to Bloomberg Radio.
Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
Just about 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, Shonali Bassett, counting you down to the closing bell, here to help take us beyond that bell. It's a global simulcast. It's Katie Greifeld filling in for Carol Massa, Tim Stenovic, bringing together YouTube, radio, TV audiences to really discuss what has been a very volatile day if you're looking at the intraday swings on the S&P. We were higher by 1.3%. We now close out lower by 0.6%, Katie.
Can I just say the intro lacks a certain gravitas when it's just me, but doing my best here.
You were quietly chuckling, I think.
I was a little bit after hearing this for
there is no such world where Katie Greifeld and gravitas cannot be put together.
I'm going to take that and I'm going to put it in my back pocket and move swiftly along here because, like you said, we have seen a really interesting flip here. It looks like the S&P 500, I don't know, maybe wanted to go green at some point, but not so much right now. Interesting to see tech sort of the outperformer here. That hasn't been the case recently, but an interesting dynamic that we're seeing.
At one point, tech had gone positive, Katie, and it's really interesting that it's the relative outperformer on days when Shonali yields are really rising and continuing to rise significantly. So we've highlighted that a 347 two-year yield, still the highest that we haven't seen since 2007, and really finally getting another big lift here longer out on that yield curve.
I think that intraday volatility and that longer end of the yield curve, just even the 10-year alone has really, was lower for a minute on the day, and then it really spiked much higher, and you're looking at a 317 nearly as we head into the close.
And it was from 330 that volumes really started to pick up as well on the S&P. So we are seeing actually a little bit more elevation as we head towards this close, a bit more commitment to this selling pressure. In fact, volumes now about 9% over where they have been over the last 20 days. We're looking at an 0.8% sell-off on the S&P. 3,955 is where we closed, 31 points to the downside. We're seeing at the NASDAQ, despite the cheering, it was a down day there too, 0.6% lower, 67 points lower, 11,816. And volumes actually managing to be underwhelming versus where we were the last 20 days. Volumes are higher on the Dow, and the Russell 2000 took a bit of a nosedive just into this market close. And we're seeing overall it under pressure as well to the tune of 0.8%.
If you dig into the numbers on the S&P 500, you had 85 stocks finish in the green. That means over 400 were in the red, and that is definitely reflected at the overall index level with those losses.
Same too on the sector level, Katie. For our radio audience, we'll make sure to tweet this out to you. The best performers, the worst performers, it is all red entirely on the screen except for one. There was one sector that ended up in the green. It's media and entertainment companies. You're up 0.3%. Everything else just really looked like it was pulling the weight downwards. I'll bring you down to some of the worst performers as well. It looks sort of classic risk off. A lot of this is technology and hardware, semiconductor equipment, telecom services, but then you get some of the just durables in there, the household products, the retailing segment in there, Katie. Those are off as much as 1.5%. So maybe you have a little bit more of a mixed bag down at the bottom of the screen too.
A mixed bag. Also, when you look at some of the corporate news that we got today, sort of a tale of two turnarounds emerging. Of course, we got to start with Bed Bath & Beyond unveiling its own turnaround plan, which involves shutting 150 stores, cutting 20% of its workforce, again, trying to reduce costs. But you look at the stock reaction, closing over 21% lower. You contrast that to what we got from Snap, also saying that it's going to trim its workforce to the tune of about 20%, bringing on Jerry Hunter as COO. Shareholders very happy there. Shares up almost 9% or so. So really interesting to see that sort of different shareholder reaction. I did want to talk about MicroStrategy. This is an interesting one. Just news today that Washington, D.C. is going to sue MicroStrategy executive chairman Michael Saylor for tax fraud. They are claiming that he skipped out on paying more than $25 million in income taxes. That could explain why the stock is down about 3.6%, even though you did see a little bit of a lift in Bitcoin. And I wanted to end with Chewy, sort of sticking with the Ryan Cohen theme. Chewy said that it's cutting its revenue outlook and said the customer growth has slowed. That's showing up in the shares. Taylor, I guess we are not buying enough cat food.
Okay, we got to keep going then.
Yeah, just you two, and then add in a healthy dose of Shonali Bassett with the dog food, and you're basically all three of you propping up this pet food commodity space. I'm looking at commodities more broadly, and it has been actually a down day. Interestingly, we've usually seen commodities be the outperformer, certainly on the month, on the year, but on the month we started to see oil roll over, and we've got Brent crude off by 2.8% on the day. On the month, we're seeing actually a third overall month of declines that we're seeing for oil. That is the worst losing streak in a couple of years now, and we're seeing this pressure at $95 a barrel. Interesting that we still see inflation so high over in Europe, even as WTI crude's come up by 2.9%. And indeed, we did see real weakness in European natural gas prices again today, as many start to hope that we've built up some sort of a supply in the wells, well, in the overall storage going into the winter period. But still, the anxiety around the overall supply chain coming from Russia is one to be keeping an eye on when it comes to the ECB. Let's talk about the ECB, because, of course, this is an area of focus with the euro actually outperforming and strengthening of 0.3%, because we are expecting maybe a 75 basis point hike from then. When you see inflation come in at 9.1%, yes, it's somewhat backward looking with that gas prices rolling over, but it still speaks to the food inflation, the rental inflation, and the real bind that the economies find themselves in. We saw, of course, the Canadian dollar, the loonie, weaker as we see oil drop off. Norwegian krone, again, really linked to the oil market. It's weaker to 1.3%, and really it was a story of dollar on the flat side. Mixed picture. We saw money moving into Norwegian debt, maybe in a bit of a haven bid as oil rolls over, but money moving out of UK debt and indeed Portuguese Belgium. It was a sell-off in European bond markets, Taylor.
Same here, Caroline, within full faith and credit, as we always do. Yields really sort of lifting up here all the way across the curve. Forward even now 7 basis points all the way across as you really get a lift up in the 2-year, which I know has been such a big focus, of course, for the Federal Reserve. And today, not thinking about lower growth on the horizon and the signals that you would get if yields were falling on 10s and 30s, but instead more of that reflationary, inflationary yield as well. We wrap up the month, Chanel, and for me, when we think about sort of the Federal Reserve, we think about tighter financial conditions, whether it comes in yields, nominal, real, to rising, but also an S&P 500 that closes 4% down in August, and NASDAQ 100 that loses 5% in August. So sort of these big monthly round numbers that we think about too, and sort of all the ripple effects on what these tighter financial conditions look like.
And for you, I did go back and see when was the last time we lost that much money in the stock market, and it was not last month, but it was the month before that. Let's take a look at what the Fed had to say. Fed officials have been stressing that they're committed to defeating inflation, but they're vague about how big that policy move is going to be. Loretta Mester, president of the Federal Reserve Bank of Cleveland, she spoke earlier in Dayton, Ohio.
The size of rate increases at any particular FOMC meeting and the peak Fed funds rate will depend on the inflation outlook, which depends on the assessment of how rapidly aggregate demand and supply are coming back into better balance and price pressures are being reduced.
You think about her comments right there about fighting inflation, and we've been calling it the do what it takes chorus, but you also think about what this means if Jerome Powell abandons that soft landing and looks towards that other reality of a growth recession, which might not be as painful as a so-called hard landing, but painful in its own right, Katie?
Yeah, it's hard to say on the spectrum of pain where a growth recession falls in between a soft and a hard landing, but it is interesting to sort of boil down all the Fed speak that we've gotten, and man, I hope it keeps coming because it gives us something to talk about. But again, it feels like they're trying hard to make the case that they're going to be aggressive here, but not get married too much to the specifics of what size of a rate hike. And remember, Powell basically did away with forward guidance at the last Fed meeting, and I remember the narrative at the time was, okay, we have 2 inflation prints, we have 1 jobs report before the September meeting. With Friday's unemployment report, we just have 1 box left to check, and that's CPI.
And interestingly, you'll get a little hint of that as to what wage inflation looks like. ADP, it's a new set of figures, a new methodology. But it did show if you're actually leaving your company, joining another, you get an uptick of about 16% in pay. You get 7% if you're just, on average, getting more, managing to push for yourself within the company that you already work in. But hint, hint. It's also interesting, though, that overall, we are getting these not just only Fed remarks, but micro data. And I think really what speaks to me is the snaps of this world, the fact that we've got Bed Bath & Beyond. What are we going to see in terms of the job losses, and will that come out in the bigger data?
The biggest question I have about Snap, Bed Bath & Beyond, was this macro headwinds or is this execution of 2 companies that are struggling to execute? My answer this morning to John Farrow was, I think, a little bit of both, but I'm really excited to dive into that a little bit more. I know that we on TV have some great analysts coming up to help do that. But the macro headwinds are legit concerns here, Katie.
Well, the question I have about Snap is who uses it still. I haven't thought about that.
Are you not Gen Z enough, Katie?
Not Gen Z. I'm on
You're
TikTok.
just on TikTok, right?
I'm trying my best. I'm trying.
I need to be on it.
A lot of big questions.
What about Be Real?
Say that again?
You want Be Real?
No, I've thought about it. Isn't that embarrassing? In any case, guys, we
Don't worry, Instagram's just stealing that methodology too. So
yeah, I'll just wait for them to repackage it and sell it to me. But in any case, that does it for our cross-platform coverage of the market close on Bloomberg Television, Radio, and YouTube. We'll be back tomorrow at the same time, same place.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld live from New York City this afternoon. Katie, you do not use Snap.
No, do you? No, you don't.
No, I don't
definitely
either.
don't.
A lot of people do, though.
You're on TikTok. I followed you on TikTok.
Oh, you did? I didn't know that.
I know. You didn't
I am
follow
on
back.
TikTok. One thing that I found during COVID is how addictive TikTok is. It's crazy.
Yes. No, we talked about this when I had
When
COVID.
you had COVID, yeah.
I spent out. That's how I got carpal tunnel, I swear to God.
Yeah, it's so addictive, that algorithm. They really know something. Let's get to world and national news. For that, we turn to Nancy Lyons, standing by in Washington, D.C. Hey, Nance.
Thanks, Tim. In a new court filing by the Justice Department, we're learning more about the search of former President Trump's home and how investigators believe there were attempts to hide highly classified documents that officials were trying to recover. Loyola Law professor Jessica Levinson says the search warrant was sought only after repeated requests for the documents to be returned.
The Department of Justice did not believe them. Ultimately, the Department of Justice was correct not to believe that because when they got the search warrant and the FBI went into Mar-a-Lago, they found even more classified documents, some with the most highly sensitive markings on them.
Loyola Law professor Jessica Levinson, the judge overseeing Trump's request for a special master to review the documents, will hear arguments tomorrow. The Food and Drug Administration has authorized an update to COVID-19 vaccines, clearing the way for new booster shots. We get details from Bloomberg's Amy Morris.
Until now, COVID-19 vaccines have targeted the original coronavirus strain. This move by the FDA tweaks the recipe of shots made by Pfizer and Moderna with the hope that these modified boosters will help blunt a winter surge. The so-called bivalent shots contain half the original recipe and half targeting today's most common Omicron strains. The updated boosters are only for people who have already had their primary vaccinations using those original vaccines. Shots could begin within days. In Washington, I'm Amy Morris, Bloomberg Radio.
Russia says former Soviet leader Mikhail Gorbachev, who died yesterday, will lie in state in Moscow's House of Unions this Saturday. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenivek and Katie Greifeld in this afternoon for Carol Masser, coming at you live from New York City. Katie, the U.S. Open, already after the first round, some serious upsets that are happening, including past champions who have not made it past the first round. That's partly what makes these Grand Slams so exciting, because you have people who are highly seeded or have won in the tournament in the past not even making it past the first round or potentially upset. We're talking about Venus Williams, Emma Raducanu, and Naomi Osaka all out in the first round at the U.S. Open.
You know I'm not a tennis fan. Tell me how surprising.
I'm trying to talk as much as possible, so you don't have to talk,
I appreciate
talk that much.
No, I have random thoughts I can throw in here.
Okay,
But I want to hear from you. How surprising is it that these three are out? Are you shocked?
Yeah, it's really surprising. I mean, look, a lot of the focus has been on Serena Williams because she made the announcement that this could potentially be her final U.S. Open. So we've seen ticket prices move higher as a result. She, by the way, is still in the tournament and is planning to play tonight. Her older sister, though, Venus, has not made any pronouncements about her future in tennis, unlike her younger sibling. And while she has been successful and influential too, a 7-time Grand Slam champion, a black woman in a predominantly white sport, the fanfare and attention are not quite the same. And then Emma Raducanu has won the tournament in the past.
I know her name. I've heard her name before.
It's a really big deal. She's won a Grand Slam in the past.
Do you think that Venus is going to retire?
I don't know. I have no idea.
Okay.
I mean, eventually, yeah. We all retire.
Eventually, in the grand scheme of time. So you're going to be there for the next 2 days. What are you looking forward to?
Well, we're doing a lot of interviews based around the business of the U.S. Open. So people from the USTA, and then also it's the 25th anniversary of the opening of Arthur Ashe Stadium, which is just remarkable how time has flown by. So we're speaking with one of the people responsible for actually getting that thing, getting that construction done. So we're looking forward to that as well. And hopefully getting to watch some good tennis as well.
Yeah. Well, I'll be here, so don't worry about me.
All right. Well, thanks for holding down the fort. Really appreciate it. You're listening to a Bloomberg Business Week on Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a headline from the Bloomberg Professional Service, and Tencent is targeting about $14.5 billion in stock divestments this year. This according to the FT. Certainly a developing story, one we'll have more details on as they become available. It is on to the trading month of September. Stocks and bonds wrap up a turbulent August. Today, stocks move lower as traders recalibrate rate hike expectations after central banks around the globe vow to step up their fights against inflation. Today we had the S&P down 31, a drop there of 0.8%. Dow Industrials down 280, a decline there of 0.9%. Nasdaq was down 67 points, a drop there of 0.6%. Two-year yield 3.47%. The 10-year yield 3.17%. Spot gold down $13 the ounce to $17.10, a decline of 0.8%. West Texas Intermediate crude now back below $89 a barrel, 88.82 on WTI, lower today by 3.1%. So again, recapping, we had a down day on Wall Street with the S&P 500 index falling 31 points, a decline today of just about 0.8%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's Bloomberg Business Week, and we don't have to tell you if you've been in an airport recently about the nightmare that is flying right now. And a big part of that has to do with the way the demand has really snapped back. Following a couple years of people sitting on the sidelines, we've got a great voice on where people are going, where they're flying, what we can see when it comes to inflation and the impact that that's having on travel. We have with us Brett Keller, the CEO of Priceline. It's part of the publicly traded booking holdings company. Brett, great to have you with us. How are you?
I'm doing well, thank you. Thanks for having me on today.
Yeah, it's really good to have you with us. Okay, so we got a nice little chunk of time with you, so we're going to talk a lot about trends and where people are going. But first of all, I want to hear about Labor Day, because we got the three-day weekend coming up. What are you seeing on your platform in terms of demand for traveling? Are people getting out there still?
Yeah, obviously we're coming off of a very strong summer travel period, and we had record, demand coming through our platform and through obviously many of the other travel platforms in the marketplace after a pretty much a non-travel 2020, a little bit of demand coming back last year. This year was folks were really getting back to traveling again. So as we're coming out of the summer, school's starting up again, Labor Day still looks very good in terms of consumer demand, very healthy. People are still continuing to travel despite, really what has been a very difficult, I think, financial period here over the last couple of months with gas prices, et cetera. We're seeing very healthy patterns for not only Labor Day, but really into the fall as well, as people are really starting to ramp up their searches and their plans for holiday travel as well.
Brett, you mentioned gas prices, and let's put this conversation in the context of what we're seeing in the broader economy right now. Inflation, of course, is on everyone's mind, and the big question we've been asking over the past several months is, when does that lead to demand destruction? But it sounds like from what you're saying, you haven't really seen that in your data yet.
We haven't yet, and there's two, I think, facts we can point to here. One is that hotel demand through the month of July, public data showed that was very healthy. And I think what we're seeing in August, it continues to be healthy. The drive market is a big market in the U.S., and gas prices certainly should play a role in that. I think with gas prices coming down a bit over the last few weeks, that's certainly going to help Labor Day. What hasn't really moved down yet is jet fuel prices. Those are still up 90% over where they were last year. And while flight prices aren't up quite that high, they are still up, right? They're up 40% versus where they were in 2021. So
Brett, because we've seen a decline in the price of oil, and as a result, we've seen a decline in the price of regular gas that we use to fill up our cars, do we anticipate that we're also going to see some sort of decline in the price of jet fuel and then, in turn, airline tickets too?
Yeah, that's stepped down a little bit. If you look back 4 or 5 weeks ago, jet fuel was up over 100%. So it's come down, 10 to 15% here in the past few weeks. But it does seem to drag and fall behind its speed of return compared to gas prices that consumers are paying at the pump. So I think we've got a little bit of a wait to go there even if pump prices continue to drop in the airspace.
And so I want to talk about how this compares to what we have seen in 2021, but also pre-pandemic levels, sort of the demand that you're seeing for flights and hotels for searches. What does it look like?
Well, when you look ahead at fall travel, flight searches are up significantly on the Priceline platform versus last year. We're seeing flight searches up over 100% versus last year for fall travel. And we're seeing hotel searches up not quite that much, but up 80%. Now, not all of those consumers are ready to pull the trigger yet, right? They're dealing with sticker shock again as they move into fall. But that does indicate a very, very high demand to travel, a demand for travel. And so consumers are very active in the market right now, shopping and looking for value that they can pull the trigger on. And I think we're going to see a very healthy Labor Day. And, we can't predict the future. We don't know what's going to happen with the economic cycles here, but things are, I think, shaping up in a good place for the fall as well.
Hey, what about rental cars right now? They're offered on the Priceline platform. And I was shocked to find that my brother rented a van to carry his 3 kids and his whole family a few weeks ago. They did it for 10 days, and it was like $3,500, Brett, just to rent this van. What is going on when it comes to rental cars?
Yeah, rental cars are in a very interesting position right now. Coming out of the start of the pandemic, there was a couple of things putting pressure on the car industry. First of all, they had a number of storms throughout 2019 that depleted quite a bit of their inventory. And as they entered into the pandemic, obviously many of the auto manufacturers had supply chain issues and stopped producing cars. And so that put further pressure on their fleets. And so as they downsized their fleet significantly, that caused prices to go up, really just skyrocket. Last year, prices were up almost 75% versus 2019. They've come down a little bit, believe it or not, versus last year, but they're still up 65%. So consumers are paying significantly more to rent a car today than a couple of years ago. And then you add high gas prices on that, that really puts a dent in the consumer's wallet. But with that said, they are selling out in a lot of markets. So consumers are still booking these cars at these higher prices.
Yeah, it's amazing. That demand certainly is still there. I mean, we really had no other choice, I guess you could say, when we were all getting together earlier this year. Hey, Brett, stick around because we're going to do some news and we're going to come back and we're going to chat more about all things happening on the Priceline platform and more trends, including where everybody is traveling to this fall and what are going to be the hot destinations next year. Brett Keller is CEO of Priceline, joining us on Zoom from Norwalk, Connecticut. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld in for Carol Masser this afternoon. In just a minute, we are going to be getting back to our interview with Brett Keller. He is CEO of Priceline. Give us a good idea on really where people are traveling right now over the Labor Day weekend and what's going to happen with prices and how much consumers are paying as a result of inflation. All that and more coming up in just a few minutes. First, though, Charlie Pellet got a lot of news.
Indeed. But let us wrap up what happened for the trading month of August, Tim. It is behind us, and it is on to the trading month of September, a 4.2% drop for the S&P 500 index this month. Now, as for the overall market backdrop, Amy Bush is Chief Investment Officer at Tandem Wealth, and she was our guest right here on Bloomberg Business Week.
It's been a tough year for investors with both the S&P 500 and the Bloomberg U.S. bond index producing negative returns. And we know why that's happening. It's because the Fed is increasing interest rates to crush inflation, so that puts pressure on bond returns, and that puts pressure on corporate earnings, which of course hurts stock returns.
And today we saw the S&P 500 index fall 31 points, down 0.8%. Dow Industrials down 280, a decline there of 0.9%. The Nasdaq Composite Index today lower by 67 points. That was a drop of 0.6%. 10-year down 21 seconds. 10-year yield 3.18%. The 2-year yield 3.48%. Spot gold down $13 the ounce to $17.10, a decline of 0.8%. West Texas Intermediate crude oil down 3.1%, $88.80 for a barrel of WTI. Tencent targeting about $14.5 billion in stock divestments this year. This according to the FT. Bed Bath & Beyond shares plunged 21.3% today after it unveiled a turnaround plan that envisions new financing, sweeping store closings, and the sale of as much as 12 million shares of stock. Recapping, spot gold down $13 the ounce to $17.10. 10-year yield 3.18%. S&P down 0.8%. S&P 500 index ending the trading month of August at 39.55. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really appreciate it. Let's get right back to Brett Keller, CEO of Priceline. He joins us on Zoom from Norwalk, Connecticut. All right, Brett, I got to tell you, Katie needs a vacation. She's got plenty of days left. I'm looking at her calendar right here, which we can do at Bloomberg, which is fun. And she has a lot of vacation days left, Katie, that you got to burn by the end of the year. I've got some vacation days I've got to burn by the end of the year. Brett, where are people going? Where are the hot places to fly right now?
All right, that is the question we need to answer here. We need to burn some vacation. So if you look at basically any day of the year, the top destinations are typically the entertainment venues. So that's going to be, topping the charts almost always is going to be Las Vegas, Orlando, New York. But as we started to look at where consumers are searching as we move into the fall, let me share a couple of destinations for you. Obviously, Puerto Rico, San Juan tops our charts in terms of the most searched domestic destination, at least within or close to the borders of the U.S. Honolulu ranks number 2 in that list. Miami, of course, always a hot spot, is where people are flocking here in the next couple of months. Where we are really seeing, though, searches pick up at a very, very high pace, almost 10 times where we were last year, are, of course, international destinations. Things were not completely shut down last year, but really to travel, you had to go through a number of hoops to actually get to your destination. So this year, that window has opened back up, and we are seeing people really both travel to and search for international destinations. And the top ones on our list, at least for the fall so far, include destinations like Munich. So people are heading to Oktoberfest. That is back on the map again. People are going to destinations like Dublin and London. Other top destinations include Amsterdam, Paris, Lisbon. Many of the hot spots that used to be big travel destinations for U.S. consumers are now.
It's our 5-year wedding anniversary. We haven't booked anything. We haven't booked anything. If I'm trying to book international right now, is it a disaster? Should I not even try?
Well, It was a rough summer, right?
Okay.
Many of the major airports overseas really couldn't handle the pressure and the crowds. And so you heard stories of lines that were 4 and 5 hours in length, many people missing flights and rebooking. I think we're past that type of pain when it comes to international travel. We're certainly not dealing with many of the testing protocols and the issues that were associated with COVID. So I think from that perspective, we're in good shape. From the airport and the congestion perspective, it will still be very busy because many of the Europeans are now, of course, moving around and across countries as well. But things have improved, and many of the airports have put limits in place in terms of how many flights they're allowed to move through their airports. So I think you'll find that it's tolerable enough that you will want to travel to some of these destinations. It's you know, these are the kinds of things that if you keep passing up in life, you're just not going to enjoy some of the best travel that the world has to offer.
That's a good point. I always think about Warren Miller and the Warren Miller films. If you don't do it this year, you're going to be 1 year older when you do. Brett, before we go, there are always rumors about the best time to buy tickets, the cheapest days to buy tickets. I know the airlines have it pretty figured out in terms of from an analytics perspective, you know, how to get the most money from us. Given that we think prices for fuel will go down as a result of lower oil prices, should we still be booking our holiday travel really early, or should we wait for prices to fall?
Well, one, I'm not sure that I would ever bet on oil prices falling. They're just as likely to go back up in the future. But when we look back in history, and this is true virtually every year, if you're booking holiday airfare, those are for the major holidays like Thanksgiving, Christmas, end of year, et cetera, you need to book early. You need to be booking in the September, October timeframe. If you're talking about other types of fall travel, you really need to book at least 2 weeks in advance. So do not wait until the last week to book your flight. You will absolutely pay up. And it is true, if you fly out on a Tuesday, you will save an average of at least 8% on your ticket. So book in advance. There are certain days of week that will play to your favor. And on Priceline, you can do things like mix and match airlines. Go out on one airline, come back on another. That typically can lead to savings of, you know, almost 10% if you're careful in how you plan. So those types of changes can take off 20 to 30% of your trip if you're careful in how you plan.
But who wants to fly on a Tuesday?
I don't know.
That's the question.
Exactly.
That's why. I guess that's why it is so much cheaper. Brett Keller, CEO of Priceline. Brett, thanks for taking some time and sticking with us for a little extra time this afternoon. It was great to get a good chunk of minutes with you today. Brett joining us via Zoom from Norwalk, Connecticut, so you might have seen him right there on YouTube. You are listening to Bloomberg Business Week on Bloomberg Radio. Taking a look at the way that markets closed out the month, it was not a pretty one. The S&P 500 down 4.2%, the NASDAQ down 4.6%. You're listening to Bloomberg Business Week, and this is Bloomberg Radio. Let's get to Washington, D.C. now for an update on world and national news. For that, we go to Nancy Lyons.
Thanks, Tim. The Department of Justice argues in a new court filing appointing a special master to review documents seized at Donald Trump's home would be a threat to national security. Bloomberg Government's Jack Fitzpatrick says the filing also raises the possibility of obstruction by the Trump team.
The FBI actually visited Mar-a-Lago in June ahead of that August 8th search warrant, and they were told by Trump's lawyers after that June meeting that they had handed over all the relevant documents. That clearly was not true.
Bloomberg Government's Jack Fitzpatrick. The judge overseeing the special master request will hear arguments tomorrow. Bloomberg is hearing from people familiar with the situation that prosecutors would wait until after the midterm elections to announce any charges if warranted. The FDA has cleared a new version of Pfizer's vaccine for adults and kids over 12 and Moderna's modified shot for adults who are over 18. Both are vaccines that target the original strain of the virus as well as the newer substrains. New gun laws take effect in New York this week following the June Supreme Court decision striking down a 100-year-old state law restricting who can carry a weapon. This is Governor Kathy Hochul.
These will strengthen the background checks and the gun safety training requirements, prohibit concealed carry in secure, sensitive locations, and require permit renewals every 3 years instead of 5 years.
Governor Hochul says new location restrictions for concealed carry take effect tomorrow and will include Times Square in New York City. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stanovic and Katie Greifeld live from New York City right now. A great story in Bloomberg Business Week written by Molly Smith that came out today is all about how U.S. women who stay single and don't have kids are actually getting wealthier. Foregoing marriage and parenthood has a bigger payoff for American women than for men, this according to new research.
This is interesting. Let's talk about the lead of this story. Ashley Marrero, I hope I'm pronouncing that right, isn't married and doesn't have kids, and she has a message for women just like her. You can have it all.
Go ahead, Katie.
No, you go on, Tim.
The 43-year-old feels a deep sense of satisfaction from her job as a sales rep for a maker of medical devices, which brings her into contact with patients, and she relishes all of the lifestyle and financial freedoms that come with being a single, child-free woman in a well-paying job. It includes an apartment in New York City, a new beach house on the Jersey Shore, and frequent travel for pleasure as well as work.
When I think of having it all, though, I think about having a family.
Everybody has a different definition of really what it means to have it all.
This is true.
She did say, and she told Molly Smith, who wrote this story, that she froze her eggs back in 2018 to keep her options open. She loves kids. She loves her friends' kids, but she doesn't know if she would love her life with kids.
So we have some numbers here. Single women without kids had an average of $65,000 in wealth in 2019. That is compared to $57,000 for single child-free men. That is according to new research from the St. Louis Fed. For single mothers, the figure was only $7,000, Tim.
Wow. That's a huge, huge difference. Hey, this is part of a bigger conversation, Katie, that we've been having about the cost of raising kids. There was that story last week that came out that says on average in the U.S. it takes, well, it's 2 weeks ago actually, it takes $18,000 a year to raise a kid. It ends up costing over $300,000 over the lifetime. In the U.S., it is just so expensive to have kids. And there are a lot of questions that policymakers have about why people aren't having more kids and why we're seeing a declining birth rate here in the U.S. And I think a big part of it has to do with the expense associated with it. Check out this story and more on the Bloomberg Terminal and at Bloomberg.com.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Turned out to be a down day for the Dow, the S&P, and NASDAQ as we move on to the trading month of September. S&P today down 31, finishing the month of 39.55, a drop today of about 0.8%. Now, for the month of August, we saw the S&P 500 index fall by about 4.2%. The Dow today down 280, a decline of 0.9%. NASDAQ down 67, a drop today of 0.6%. All major U.S. indexes had their worst month since June. 10-year yield 3.19%, 2-year yield 3.49%, spot gold 17.10 the ounce, down 0.8%. West Texas Intermediate crude down 3.1%, 88.83 for a barrel of WTI. Headline from the Bloomberg Professional Service: Walt Disney is said to be exploring an Amazon Prime-like membership program. This according to Dow Jones, which says that program would offer discounts and perks. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, after Jamie Fiore-Higgins was promoted inside Goldman Sachs, the veteran she replaced pinned her to the wall of their New York office and lifted her by the jaw. At a work conference, one of her bosses at the bank propositioned her. When she got up from her desk in Goldman's headquarters to pump milk for her fourth child, a longtime trader mooed at her. These are some of the allegations she makes in a memoir called Bully Market: My Story of Money and Misogyny at Goldman Sachs. It's a new book which just came out yesterday. Jamie Fiore-Higgins joins us now on the phone from New York City. Jamie, I do want to note that a spokesperson for Goldman Sachs said in an emailed statement that, quote, "We strongly disagree with Ms. Higgins' characterization of Goldman Sachs culture, and we decline to respond to anonymized allegations." Jamie, it's good to have you with us this afternoon. What was the moment that you realized you needed to write this book?
It's interesting. I left Goldman in the spring of 2016, and truth be told, I was incredibly depressed. For me, being a managing director at Goldman Sachs was how I identified myself and, in the world. And without it, I felt quite lost. And I was really fortunate that I was able to take some time off, and I spent some time with with my family, with my kids, and I got to know some women, and they asked me why I left my company. And so I started just telling them stories, and one of the stories, as you brought up, I talked about getting mooed at like a cow, and their reaction was so incredulous that I started to really see it in a clearer light, just how toxic the environment was. And that, coupled with the social justice movements that were happening, I saw that there's really an appetite and an interest for hearing true stories. And so I decided to write mine to shed some light on the importance of workplace equality, inspire conversation, create some change. And I did not help a lot of women when I was there. And I feel like in some ways this book is a way for me to make amends.
Well, Jamie, that's what I want to talk about. How unique your experience as a woman was. What sense do you have of that?
So at Goldman Sachs. So it's really interesting. With all the media that has been reporting on the book, I'm getting now hundreds of messages every day in DMs on my various social accounts, really showing me that my story is not unique, that I might be the one speaking up, but I'm speaking for many. And the stories have been incredibly descriptive, from women who had the same issues with breastfeeding to women who have called out inappropriate things at HR and were punished, to women who feel like they don't get opportunities that the men get. So it's very clear to me that although some progress has been made, there's still a ways to go.
Hey, Jamie, I'm wondering about how you've essentially switched careers at this point and what you're doing now, and how your experience contributed earlier on in your career, contributed to what you're doing right now as a coach that works with teens to help when it comes to leadership skills and people early on in their careers.
Yeah, and so for me, I always wanted to be a social worker. So this has been such an amazing opportunity for me to marry that long-held wish with my practical experience and really helping empower people to advocate for themselves at work, demand to get what they were promised, that are promised in, the employee handbook, and giving them the confidence to walk away. For me, I felt like I was stuck there, like I was in a prison, but the truth was, it was a prison in my mind. I was able to walk away, but Goldman Sachs and other large, powerful firms are very good at convincing people that you're nothing without them, nothing without their name, nothing without their money. So I'm really trying to show my clients that there's an abundance of opportunity in the world. And if they're not feeling seen and heard, if they don't feel like they can look at themselves in the mirror, being in the companies that are, then they need to walk away.
Jamie, I'd love to hear your thoughts on when it comes to the banking industry, when it comes to the finance industry broadly. You mentioned there's still a ways to go. And when it comes to changing the culture of an industry, where do you think that needs to start? And is it realistic to even think that the culture will meaningfully change?
I want to be hopeful. I think the new crop of entrants in the workplace want more. Firms like Goldman have amazing stats for hiring women, BIPOC, LGBTQ+. The problem is there isn't a focus on retaining them. So they're excellent at bringing them in the door. They're not excellent at getting them to stay. So I would like to see these firms have stickier careers where people want to remain there. And I think if you have these goals for hiring, let's get them the same goals at the managing director level, at the partner level. I think if you really have diverse populations at all levels of the firm, you have a chance to counteract the kind of majority viewpoint in the corner office that everyone has to assimilate to currently to be successful.
Hey, Jamie, working with people earlier in their careers right now, I'm curious what you would say to somebody who came to you and said, you know what, even knowing, what I've read in your book, the allegations that you make in there, I still want to go work in finance. What advice would you give them?
So finance is a big world. There's an abundance of opportunities. So I think of careers as like a pie. You have your passion, you have your compensation, and you have your flexibility. So really, for new entrants, let's go in with our eyes wide open about the experience. Part of the problem I think some of these companies have is that they promise one thing and like on the C-suite level, and on the day-to-day things don't happen. So really read the fine print. Do your research, see what the company experience is like, and then figure out what you're willing to deal with. I mean, listen, some people might say, you know what, it's not a great environment. Well, that's okay. Then we can work on tactical ways to, manage that day to day. But I am a firm believer, at Goldman Sachs, there was a big scarcity mindset. Like there was never enough. There was never enough opportunity. You had to constantly earn your seat every day. There was no time to rest. You were always proving yourself. I want people to be able to say there's an abundance of opportunity. If you're passionate about finance, you can do that in a lot of different places. You can do that at corporations where you feel like your values are aligned with the firm. You don't have to settle.
Jamie Fiore-Higgins, former Goldman Sachs managing director, author of the new book, came out this week. It's called Bully Market, My Story of Money and Misogyny at Goldman Sachs. Joining us this afternoon on the phone from New York City. Jamie, thank you so much for taking the time. Well, it is the final trading day of the month, and it was not a pretty one. The S&P 500 finishing the day down by close to 0.8%. That's put its August performance at 4.24% to the downside. The NASDAQ composite finishing the day down by 0.5 percentage point, down by 4.6% for the month of August. And the Dow Jones Industrial Average finishing the day down by 0.9%, putting it solidly in the 4% decline level as well. So all three major indices closing lower by 4%. Katie Greifeld, a big thank you to you for holding down the fort in New York City while I anchor from Brooklyn. We'll be back live tomorrow at 2 o'clock. A big thank you from the entire team here at Bloomberg Business Week. This is Bloomberg Radio.